create a new way for working Americans to start their own retirement savings. My RA. It's a new savings bond that encourages folks to build a nest egg.
Building a nest egg. In the State of the Union address there, the president talked about creating a 401k plan that everyone could be actually having access to, called My RA.
Brad Huffman is here with Future Finances and is ready to make some investing choices made easy. He's going to explain some simple ways that we can all save for retirement right now. Good morning again, Brad.
Good morning.
So this My RA thing, is that easy? Do we need a lot to get started?
No, not really. I think it's really designed, and it's going to complement some of the existing vehicles we have, the traditional IRA, Roth IRA. This one is, the nuances is going to allow you to put a little bit more in than the traditional IRAs and the Roths that we have today, but it's very specific. You're going to be focusing really on government bonds. So it's really, in my opinion, designed for a more conservative investor who wants to put a little bit more away than they can now from existing vehicles. Personally, I don't know that it's going to catch on all that much because the limitation of the investment vehicle, in my opinion, is just not a great
If you were to do that, when would you get started on that? When
well,
is it possible?
I think they're looking to get it launched as soon as possible, so I'd be surprised if it's not sometime in the next 12 months that it's up and going.
I think the reason that he launched onto this, from what I gather from the address, is that if you're not in the stock market, if you don't have the benefits of being one of those players right now, you feel like you've lost out.
Right.
You feel like there's no hope for retirement in all of this. Can you help us figure out a plan then for people who don't have a nest egg right now? What do you do?
I think the first and most important step is thinking that, boy, I need to have a big pot of money to start investing. That's just not the case. Maybe 20 years ago you did, because you couldn't walk into a Merrill Lynch and say, here, open my account for $100. They just would laugh at you and you'd walk away. Today it's changed. Many of it you can do online, you can do directly over the phone. You can start with any amount. And
let's start with that $100.
Yes.
Let's say that we begin there and we want to get started with that. What's our process? What should we do?
Basically, the best bet is you work with a big brokerage firm or an investment firm or even a bank or credit union. You find a low investment minimum fund, and there's a lot of different investment vehicles out there. You put your money in, or in some cases you don't even need to start with anything up front. You can commit $25, $50, or $100 a month, and they'll let you open the account. My first investment I did with $80 a month. I didn't start with any initial up front. I just said I'm willing to commit. And then you just keeps going and going and going. So again, if you think you got to save a bunch of money to get started, what is a bunch of money? It may never happen. So just get started. Get started with any amount. I don't care if it's $25 a month. I bet I could find an investment vehicle out there that will allow you to do that and get started.
Okay, interesting. All right, what are some other tips then? You said save, even if it's $100, start that. What is the work retirement plan then for some people? Not everybody has one.
Right, there's two choices. If you want to get started, a lot of people, wow, what vehicle do I use? The simplest is if you have an employer that has a retirement plan, the 401k, 403b, start there because one, it's easy to get started. There's some tax benefits for you, and you can put almost any dollar amount you want in. So if you have the employer plan, start there, and if they have a match, please start, because that's free money.
That's free money.
If not, my choice is a Roth IRA.
So you're saying take your work IRA and transition it, though, to a Roth IRA?
No. If you have access to a retirement plan at work, that's
just do it.
I think that's your starting point.
Just do it.
If you want to get started investing, that's a great vehicle. You're going to have a lot of investment options to choose from. That's the good way. If you, like you said, if you don't have access to a retirement plan at work, the Roth, in my opinion, is a great default vehicle. One, you can do it anywhere. You can open at a large brokerage firm, a Fidelity, Vanguard, a bank, a credit union, almost anywhere. And again, you can start with those small dollar amounts.
However, you're paying taxes up front.
That's the trade-off. Yeah, with a retirement plan, you're going to generally get an upfront tax benefit because it's not taxable. With a Roth, you're flip-flopping it. You're not going to get an upfront tax benefit, but it's going to grow tax-free if you use it for retirement. So there's a trade-off there, and generally for younger investors or investors getting started, they're going to be in a lower tax bracket. So I think that's what makes the Roth very appealing, because they're sacrificing on the front end, but when you think about growing 20, 30, 40 years and never paying tax on that if you do it right, that's very, very attractive in my opinion.
By later on, it's a much better plan when you're not paying the tax when you pull it out of there. But you're saying also keep it simple. Don't get real complex as you get started. Don't get yourself confused.
Yeah, there's literally tens of thousands of investment options out there. Don't be overwhelmed. Don't be shocked. There's ways to keep it very simple. My thing is, if you're going to start an investment plan from scratch, pick one investment You don't need 10, 15, 20 different investments to have a good, solid, diversified plan. There's so many great investment vehicles out there. Many of them will follow broad markets like the U.S. stock market. You say, I want to invest in the market. Well, guess what? There's probably at least 10,000 funds out there that do just that. All of them very good. I prefer low-cost funds. That's the best way to start. Try to keep commissions and things like that out of the equation for a new investor. Find a very inexpensive vehicle, and then as you get more sophisticated, maybe you want to buy individual stocks down the road. But I think you got to kind of start simple.
And again, crawl before you run.
Let the market do what it does. Sometimes it goes up, sometimes it goes down. That's the nature of the beast. Don't get panicked. We've seen the market kind of get dicey recently. That's not a bad problem if you're a young investor, because the prices go down. It's like a sale. Now, if you're retiring tomorrow, there's a little more planning that goes into it. But getting started, risk is your friend. Embrace it as much as you can, and again, keep it simple. It doesn't need to be incredibly complex.
Good to know.
Brad Huffman, thanks as always.
Pleasure.
We appreciate your advice.
Absolutely.
If you'd like to know more, in fact, on how to invest for yourself, go